It's so good to see you. I'm glad I have you today because I really want to talk through the headlines, markets, and geopolitics with the question, when will stocks recover? Rising tensions in Iran have pushed oil prices higher and created short-term volatility in the markets. Historically, however, geopolitical conflicts tend to have only a temporary impact on stocks. Now, to see what this looks like, I do want to take a look at the S&P's 3-month performance. We do still see some red on the board. Why do we tend to see stocks fall first when tensions rise?
Uncertainty. The market has an emotional component to it for sure.
Mhm.
And when people feel insecure, they want to pull their money and put it closer to the vest. So we always see stocks drop first.
Mm-hmm. So I'm glad that we're talking about, the emotional component of the market, but I do want to take a look at this chart because I know you're a student of history. So this shows the S&P usually recovers quickly from geopolitical events. As we can see here, several events and mostly short, shallow pullbacks. Can you explain what we're looking at?
Yeah, well, if you look at this axis, the vertical line is how many days the downturn may happen or may last. And the horizontal axis is the size of the downturn, how much percentage the market actually went down. So you can see that everything's kind of clustered over that lower right-hand corner. And that means that historically, the majority of historical events that have happened have a short duration and not too huge of an impact as far as a downturn.
Mm-hmm. Good to see that because it tends to feel like when we're in the moment, like when will this end? It feels
Exactly.
interminable. So
Yeah.
for investors watching these headlines and rising oil prices, what's the most important perspective we should be keeping in mind before making portfolio decisions?
Well, for one thing, we're not making a lot of portfolio moves because we have a plan in place for our clients to for the long haul, not for the immediate thing that's happening on the news today.
Mm-hmm.
Um, One thing people don't realize is the United States does not get any of our oil from the Strait of Hormuz. It all comes from North America. We are actually producing more oil right now than Russia and Saudi Arabia combined. And we're an exporter of oil. We export 35% of it. The oil we do import is from Canada and Mexico. So we're not relying on what's happening over in the Middle East,
Mm-hmm.
which is comforting. Nonetheless, our oil prices are up at the moment, but we don't see that long term. The long term forecast is to get back down to about $65 a barrel.
Mm-hmm. And, this all goes to underscore how we tend to react so emotionally to these headlines. I mean, they sound stressful and scary, but can you explain how emotional investing tends to lead to bad financial decisions?
Yeah, yeah. And unfortunately, this happens a lot. For one, you hear something on the news. When you hear it on the news, it's already happened. And then there's the component of you think about it for a day or two, and you just can't time the market, and it never works out. So what happens is by the time people decide what they're going to do, they buy high and sell low. And that's exactly why we're not buying right now because the market is at an all-time high. So we're watching to see what's happening and not making any decisions to move stuff around right at the moment.
Right. Having that plan means you're making decisions well in advance based on
Yes,
data, not how we feel in the moment. So,
yes.
Bridget, maybe somebody is listening to this and recognizing either that they don't have a plan or their plan is just not in line with their risk tolerance. If they'd like to sit down with you and talk this through, what's the best way to reach you?
Well, they can always call us at the office, 480-581-8545, or they can go on our website and schedule a call with us that way, www.rileyhiggins.net.
Great. Bridget, thank you.
Thank you.